I think everyone has this very specific, very Hollywood montage in their head about what it looks like to finally make it as a trader.
Oh, yeah?
You picture the guy, and it's always a guy screaming at like 6 different monitors, veins popping out of his neck.
Phones are ringing off the hook.
Exactly. He slams the P-board, spins around in his chair, high-fives his buddy, and pops a bottle of champagne because he just made $1 million in 30 seconds. It's loud, it's fast, and it looks like pure adrenaline.
The Wolf of Wall Street fantasy. This is a powerful image, and it's what draws so many people into the markets in the first place. They want that rush.
They want the action. But today, we're going to take that fantasy, rip it into little pieces, and just throw it out the window. We're doing a deep dive into a breakdown from the 5 signs you're actually becoming a profitable trader. And the premise here is, it's basically a splash of ice-cold water. It suggests that if you're feeling that movie-style adrenaline, you aren't winning.
You're likely about to blow up your entire account.
All right.
It's a massive counter signal. The core argument in this source is that the moment a trader becomes profitable isn't when they hit some massive win streak. It isn't when the bank account explodes overnight. It's a quiet, almost invisible shift.
Like something's changing in the background.
It's psychological architecture being built in the background, yeah. And the problem is, because it doesn't look like the movies, most people just miss it.
Because they're looking for the fireworks. They want the external proof.
Exactly. They're looking for lagging indicators, the account balance, the green days, the new car. But this source argues that the real indicators are internal. They're leading indicators.
There are shifts in psychology and behavior that happen before the money shows up.
That's it.
And that's really the mission for this deep dive. We're trying to identify these invisible signals, because if you don't know what to look for, you might actually quit right before you succeed.
That's the real danger.
You could be doing everything right, but because you aren't seeing the cash yet, you think you're failing.
Precisely. It's about recognizing that you've changed, even if your wallet hasn't quite caught up yet. So, let's unpack these 5 signs.
Okay, let's jump into sign number 1. And I have to say, this one is the biggest buzzkill for anyone looking for a thrill. The first sign that you're becoming a pro is you are bored.
Deeply, consistently bored.
I have to play devil's advocate here immediately. We're taught that passion and excitement are key to success, right?
Yeah.
If I'm bored, doesn't that mean I'm disengaged, that I don't care about the outcome?
In almost any other field, yeah, you'd be right. If you're a musician, you want passion. If you're an athlete, you want intensity.
Yeah.
But trading is.
Yeah.
It's just counterintuitive. Think about what excitement actually is, physiologically.
Heart rate goes up, palms get sweaty, you feel awake.
It's a chemical dump. It's dopamine. It's cortisol. When your heart is racing, when you're glued to the screen, refreshing the position every 3 seconds, that's your body entering a fight or flight state.
Okay.
Now ask yourself, is fight or flight the optimal state for making complex, probability-based decisions?
Definitely not. You get tunnel vision. You react instead of responding. You're not thinking clearly at all.
That's the adrenaline trap. Yeah. And the source makes a really compelling point here.
Yeah.
If you're excited, it usually means one of 2 things. 1, you're just gambling and the risk is too high.
Right.
Or 2, you are surprised by what the market is doing. And a professional should almost never be surprised.
The source uses a specific analogy here that really, really stuck with me. The surgeon.
It's the perfect comparison. Imagine you're going in for open heart surgery. You meet your surgeon. Do you want them pumped up?
No.
Do you want them high-fiving the nurses, blasting heavy metal and screaming, "Let's do this," right before they make the incision?
Absolutely not. I want them to be a robot. I want them to be so calm. It's almost unnerving.
Exactly. Imagine a surgeon performing their 500th bypass. Are they excited? No. They're focused. They're executing a routine they have practiced thousands of times, honestly.
They're probably a little bored.
They might be a little bored. It's just work.
It's just execution.
And that is what professional trading feels like. If you're sitting there and your heart is pounding, you're still a beginner. You are paying the market for entertainment. You're treating it like a casino.
So the takeaway here is that we need to sort of reframe boredom. We think boredom means nothing's happening. But in trading, boredom means I know exactly what's happening and I'm just executing my plan.
Ideally, yes. If trading feels like boring work rather than a thrill ride, you are on the right path.
Yeah.
The goal isn't dopamine, it's steady execution. It's almost like if you're having fun, you're probably losing money.
Or you're about to. It's a hard pill to swallow, but it makes total sense. Okay, let's move to sign number 2. This is a behavioral shift that happens alongside the boredom. You stop checking the scoreboard.
This is a huge one. You stop checking your account balance or your P&L, your profit and loss during the trading day.
Okay, again, I have to push back a little. In any business, you check your numbers, right? A shopkeeper checks the register. A CEO looks at the quarterly report. Why is looking at your P&L bad?
A shopkeeper counts the till after the store closes. They don't count the cash in the register after every single customer transaction.
That's a fair distinction.
When a beginner checks their P&L constantly, and I mean having that little window open where the numbers flash green and red tick by tick, they're not checking for business reasons. They are checking for validation.
It's an identity check. Am I up? I'm smart. Am I down? I'm stupid.
That's it. It triggers that variable reward schedule you see in slot machines. It hooks your brain into the short-term outcome. But the source argues that profitable traders have shifted their focus entirely.
So they don't care about the result of the trade while it's happening.
Not really. They care about the process. The question changes from how much money is this making to did I execute the plan correctly?
And there's a nuance here the source mentions. It's not that you ignore the trade completely, right? You don't just walk away.
Right. No, of course not. If you need to manage a position move, a stop loss, take partial profits based on a technical level, that's fine. You look at the chart, you look at the price action. That's part of the job.
But not the money.
But doing the mental math of calculating your new net worth every 5 minutes, that's detrimental.
If this hits my target, I can buy those shoes. If this hits my stop loss, I can't pay the electric bill. That kind of thinking.
That is poison. Because once the trade is placed, the money is irrelevant until the session is over. If you check constantly, you're reinforcing the idea that the outcome is what matters. But the pro knows that if you get the process right,
the outcome takes care of itself.
It does.
It's like planting a seed and then digging it up every hour to see if it grew. You're just going to kill the plant.
That's a great way to put it. You have to trust the system enough to let it run.
Okay, so we're bored and we aren't checking our balance. Sign number 3 takes this discipline to a whole new level. Ruthless selectivity.
This is where we see the shift from the old you to the new you. And honestly, this is usually the first tangible sign that someone is crossing that bridge from amateur to professional.
What happens?
Their volume of trades just drops off a cliff.
Which is another one of these paradoxes, isn't it? The beginner thinks, if I want to make more money, I should do more of the thing that makes money. More trades should equal more profit. It seems logical.
It seems logical, but trading is an inverted profession. In a factory, if you work more hours, you produce more, you get paid more. In trading, more often just means worse.
Oh, so?
The source argues that overtrading just increases mental exhaustion and the probability of making an error.
So the new you, the profitable you, actually trades less.
Much less. You start skipping trades. And not because you're scared, but because your standards have gone through the roof.
The source breaks this down into categories of setups, which I found really helpful. It says you have great setups, good setups, and mediocre setups.
And here's the brutal math behind that. Great setups make money. Good setups usually just break even. They're a wash after commissions and fees.
And mediocre setups.
They lose money. The problem is, beginners feel the need to be in the game. They have FOMO. So they trade the good and the mediocre just to feel active.
They just want to be in the market.
But the pro waits for perfect alignment. The narrator in the source actually shares a personal stat here. They went from taking 15 trades a week down to just 3.
Wow, that's an 80% reduction in activity.
It is, but here's the kicker. Their win rate didn't really change that much, but their profitability exploded.
Why?
Because they removed the noise. They stopped taking the 12 trades that were just distractions or potential losses.
It's quality over quantity, but I imagine that feels weird at first. You're sitting there staring at the screen, doing nothing for hours. You probably feel lazy.
You feel like you're missing out. You feel like you aren't working. But you have to reframe that laziness is actually professionalism.
I like that.
You are being a sniper, not a machine gunner.
A sniper, not a machine gunner.
The machine gunner sprays bullets everywhere, hoping to hit something. The sniper lies in the mud for 3 days, waits for one perfect shot, takes it, and goes home.
But lying in the mud for 3 days sounds painfully boring.
And we're back to boredom. It all connects. If you can't handle the boredom, you'll become a machine gunner and you'll run out of ammo.
Okay, moving to sign number 4. This is about emotional regulation, but specifically about the bad days. Redefining failure.
This is the sign that losses no longer bother you. And the source is careful to distinguish this from being numb or, careless. It's not that you don't care, it's that you process the loss in a different way.
I think for most people, a loss feels like a personal attack. I'm stupid, or the market is rigged. It really hurts the ego.
That's the beginner mindset. They spiral, they get angry, they revenge trade to try and make it back instantly, or they get depressed. But the profitable trader, they view a loss as simple data. Just think about the mathematics of it. Let's say you have a great strategy with a 60% win rate. That is a Hall of Fame win rate in trading, by the way.
Right. 60% is amazing.
But that means 40% of the time, 4 out of every 10 trades, you will lose. It is a mathematical certainty.
So it's not a failure, it's just an expectation.
Exactly. So when a pro takes a loss, they aren't thinking, I failed. They're thinking, oh, there's the 40% showing up. Expected. Moving on.
It's just the cost of doing business. Like a restaurant buying food that spoils, you don't cry about the spoiled milk, you just factor it into the budget.
That's it. It's an operating expense.
Yeah.
The source mentions a specific test for this. Can you lose 3 trades in a row and have your mood remain completely unchanged?
Oof. 3 in a row. That is a tough test. That tests your soul.
It does. But if you can do that, journal it, accept it, and not feel the urge to smash your keyboard or double your bet on the next one, you have crossed a threshold that most traders never, ever reach.
It's the end of the emotional roller coaster. Okay, bringing us to sign number 5. This one effectively closes the loop on your development. You stop looking for new strategies.
To the end of the search.
This really resonates because the internet is full of the secret strategy, the magic indicator, the 100% win rate algorithm. It is so tempting to keep looking for something better, especially when you're in a slump.
And that's what we call horizontal learning. Beginners hop from strategy to strategy, new Discord servers, new YouTube gurus, looking for a magic bullet because the current one isn't working fast enough.
So they learn a little about a lot of things.
They learn the basics of 20 different things, but they master nothing.
But the pro does vertical learning.
Correct. They commit to one edge, one strategy, and they go deep. They refine the entries, they tweak the exits, they understand how that specific setup acts in every market condition.
The source says it becomes like a language they speak fluently.
That's a beautiful way to put it. When you speak a language fluently, you don't need a dictionary. You don't need to think about the grammar. You just speak. When you know your strategy that well, new strategies don't look like opportunities anymore.
They look like distractions.
Exactly.
You know you found your edge when you literally don't care what other people are trading. Your friend could be making a killing on crypto or Forex, and you're just like, cool, I'm sticking to my boring little setup.
Total commitment. You stop widening the net and start sharpening the spear. You realize there is no secret indicator. The secret was always just discipline and execution.
So those are the 5 signs. Boredom, detachment from the scoreboard, selectivity, unemotional losses, and stopping the search. But, and this is a big but, there is a trap here.
The danger zone.
The source calls this the uncomfortable truth. What happens when you do all this and you're still broke?
This is probably the most critical part of this entire deep dive, the gap between behavior and results. The source warns that these signs often appear before your bank account starts to grow.
That sounds terrifying. You're doing the work, you're disciplined, you're bored, you're selective, and your account is just flat.
It's the ultimate test of faith. You start to doubt.
Yeah.
You think, is this working? Am I just fooling myself? Maybe I should go back to the excitement. Maybe I should go back to gambling.
The narrator shares a really powerful personal story here. They traded a breakout setup for 8 months.
8 months.
8 months. And during that time, they experienced all 5 of these signs. They were bored, they were disciplined, and the result?
Nothing.
Break even, stagnant, for 8 solid months.
Can you imagine the psychological pressure of that? 8 months of professional work for 0 pay.
I would have quit. I think 99% of people would have quit or changed strategies.
And that's why 90% of traders fail. This is the filter. If you abandon the process during this gap because you don't see immediate money, you just reset to 0.
So why does that gap exist? Why doesn't the money show up immediately if the behavior is right?
Well, sometimes it's just market conditions. Maybe the market just isn't trending in a way that favors your specific strategy right now. Sometimes it's just statistical variance. But the point is, the internal shift must happen before the external shift can.
So what happened in month 9 for the narrator?
The market finally aligned with their edge, and the account started growing, predictably and steadily. It wasn't magic. It was that the internal work had been completed, the container was built, and finally the external circumstances matched up.
The quote that hit me hard was, "Money is a side effect of becoming the person who can handle it."
That is the nugget of wisdom right there.
Yeah.
You cannot have the wealth until you build the character to sustain it. If you got lucky and won big early on without these 5 signs, without the boredom and the discipline, what would happen?
You'd lose it. We see lottery winners do it all the time. They get the money before they get the character.
Exactly. The boredom, the discipline, the emotional regulation, that is the container. The money is just the water you pour into it. If you don't build the container first, the water just spills everywhere.
So if you're listening to this and you are feeling stuck, maybe check these signs. Are you bored? Are you skipping bad trades? If you are, and you're still not rich, don't panic.
Don't panic. You're in the gap. You are in the danger zone. But it means you are close.
It's actually good news.
It's the best news. It means you have separated yourself from the amateurs. You just have to wait for the lagging indicator, which is the money, to catch up to the leading indicator, which is your behavior.
I love that. Behavior is the leading indicator. Okay, let's bring this home. What does this all mean for someone listening who maybe isn't a trader? Maybe they're starting a business or writing a book.
I think the synthesis here is that we have to move from a mindset of gambling and hoping to a mindset of knowing and executing. Whether it's trading or business or learning a skill, we're all addicted to the event.
The big win, the viral moment, the launch day.
Right. But success is actually just boring consistency.
It is.
And my final thought for the listener would be to trust these internal signs more than the external ones. If you feel calm when things go wrong, if you feel bored when you're doing your work because you know it so well, celebrate that.
Yeah.
That is not a lack of passion. That is the presence of mastery.
The boredom is the breakthrough. That is such a flip on how we usually view the world. We chase the high, but the high is the trap.
It really is.
Yeah.
We are taught to chase the adrenaline, but in high performance, the adrenaline is where the danger lives. The safety and the wealth, it lives in the routine.
So next time you're sitting there staring at a chart or a spreadsheet or a blank page and you feel absolutely nothing but a quiet focus, smile, because you're probably about to make it.
Couldn't have said it better myself.
That wraps up our deep dive into the invisible signs of trading success. Thanks for exploring the boring side of wealth with us.
It was a pleasure.
Catch you on the next deep dive. Stay bored, everyone.